Good morning, everybody. Welcome to today's video. Today's video is going to be on traditional technical analysis using a multitude of tools including time, price, and volume. So let's get into the ranges. As you can see on the right hand side, we're looking at the daily chart, and on the left hand side we're looking at the monthly. The one in the middle is going to be the weekly, and I'm also going to share with you guys this here, which is basically a smaller version of what we're looking at right now. I'm going to change the daily to the 4 hour, and then the 1 hour I'll change it to the 15. We'll do that right after this so that we can really get a nice little sneak peek inside of the internals and whatnot. So you can see that on top we have the RSI and the MACD pulled up. We also have the volume indicator at the bottom here, and I am going to get into the technical analysis. So let's start off with the monthly chart. We're trading on Bybit here, and we can see that we're in this kind of no trade zone on the RSI. Okay, but what I really wanted to point out here, just on the monthly, is that we had a lot of volume right here, right at the bottom, which indicated the support. But and we also had decreasing volume, but it was still big volume to the upside. So now that we're trading underneath, and this is why I have this pulled up on the daily chart, we have the mass pressure volume, right? Because we want to understand how many traders are actually trapped right now in their position. So if we actually zoom in here of this uptrend only on the daily chart, we can see that, well, basically all these guys right here are in losses in this position right here. They probably took a loss, it went all the way down here. Now we're trading basically on support, and the reason why this thing bottomed right here, I'm actually going to get into that very soon. There's some decent support here back on the weekly chart, and on the daily chart there's just a little bit of a bunch of support, a bunch of reason for this thing to go. Now for the time indicator, right here, we've got how many more days here? Let me go ahead and zoom in and get the right one here. And also, if you can see at the top here, the momentum, divergences between the tops, and then the tops and the RSI. We did bounce on the bullish bounce zone. We came up and we sold off on the bearish sell zone, came back. I think we bottomed on the daily chart on the bullish bounce zone, a little bit close to the bearish bounce, and it came up, sold right here, and almost double topped right here. So let's continue, and definitely did do a divergence. So if you want to focus on the RSI, it's a really good indicator, a good tool if you know how to use the time frame confluence, at least 2 charts. The MACD, I use it just there as the idea of momentum, to help me remind me of momentum. I like the histogram for momentum, and the moving averages is momentum, and the divergences. So for the time, we have 3 more days to reach this bottom here, and this time indicator is basically just this past cycle pulled into the future. So this one here, we've got excuse me, we have 7 days left on this time frame. 7 bars, sorry, 49 days, 7 weeks, and 21 days or 3 weeks right here to make a bottom. And what we're talking about right now is February 22 and also January 22, right there from November's top. Okay, so on the weekly, on the monthly chart, we have this big resistance that we did close above, which is kind of a good sign so far. And then let's kind of get into, I want to show you guys this Fibonacci, which was really amazing here on Bybit. I want to extend it so that you guys can see clearly how well of a support this is. So first things first, if you pull it from on Bybit at the bottom to the top, You get a perfect Fibonacci retracement there of 61.8. Just beautiful, beautiful support. Coming up, making a triple bottom on this support and bouncing really, really strong. This was resistance, this was resistance, came back down, right? Resistance, resistance, came back down, upwards, broke all of it, broke through the 382, which was also a breakout here. It came right up to the next resistance points, came back down to this resistance points. So if you would focus just on trading the these resistances, these resistance points, you would be profitable. The way I look at the markets is that formations, price formations or patterns is basically number one, and ratios and resistance levels, to me, they're number three on the list of importance. Although I really do think that they're so good and so important in the market that you have to have a recipe for success. Time is number two for me, because without the formations or without price pattern formation, you can't necessarily have time. So it goes, you look at the price formation, okay, you look at the time, you look at the resistances, and finally, last but not least, you look at the volume at the tops and the volume bottoms. And now, because of TradingView, we're so blessed to be able to have the ability to look at the sideways volume. So right here, this is why I have this nice little H line, horizontal line, that shows that there's a lot of volume right here. If I were to make a zone, it'd be just like this. Whoops. It would basically be just like this. I think it's Alt H. Yeah, that one. Yeah, that's what I would be looking for if it went upwards, just like that. Okay. For the RSI and the MACD, I'm not that interested that much in the RSI. Although, like, if I were to trade it, I'd use it for like alerts. Because if it starts coming up here, this is going to be your sell zone. And then how I use it, I look at the RSI first and like that, and see if it works, and if it actually works with the price action. And to be honest with you, there's a lot of resistances, and I want to zoom in here a little bit on the on this right here. So this was the 382 also that hit, came back up to the thing, and the question is, are we going to form a head and shoulders right here? Right, that type of pattern, a head and shoulders, would basically hit the 61.8. And look, on the fourth touch, generally speaking, I mean, depending if you want to look here on the big time frame for formations, the patterns for a double bottom, but at the same time, the fourth touch starts becoming weak on the fourth touch. So if we come down and retest the 61.8, I wouldn't want to touch it. I'd want only for us to hit the 0.5 and go upwards. You know, we've already hit the 382, so that would be your head and shoulders. Because if we do have a head and shoulders like we had in March of 2020, the COVID, it made such a huge panic that it broke the bottom and it literally just went down like that, like fast. I don't have the data here that I can show you, but so let's take a look at the zoomed in picture here of the daily chart, and let's use this one here because I want to see the wicks and whatnot. So the volume indicator on the left hand side is really important in my opinion, because it really gives you really good zones. So if I go ahead and take this off, we're underneath the point of control from the highs, and this one here from the bottom here, guys, point of control, that we're still underneath it. That's not necessarily a very good sign. This is the balance area, so a lot of people would basically be making trades here either up or down because we're at the balance area or value point of control. So right there, we're just ranging, right, or chopping around and stuff like that, just giving you some levels And last but not least, I'm gonna go ahead and take a look. I would probably be trading this trend right here. To actually trade this, I'd be trading this trend right here, which is why I have on my other monitor that I'm about to show you here the smaller time frames. So this on the left hand side is the daily chart. I can go ahead and add this one here, but I want to focus on the price action. So that's why I have just the price action here. Whenever I want to pull up, I have the volume, I have the RSI, the MACD for the momentum indicators. So with that being said, I want to change this to the 4 hour, this to the 1 hour, and this to the 15. And right after I make this video, I'm going to go hunting for some trades on the altcoins list that I have, and on Bybit, for Bybit. So I like BTC, but right now it's not really that tradable, in my opinion. So I'm just going to go look elsewhere for some better opportunities. But this is how I would do it. I'd be looking at the trend first of all. The 4 hour has a nice downtrend here, giving you a little bit of a correction. Huge move here. Came upwards, right? Found some type of resistance somewhere like that. And this is the huge telltale to me. It's the candle closes are so important. I mean, you would have been looking here, right? Oh, look, we broke out. But then the market makers, whatever, they start taking their profits or start rejecting it all the way down there. So that's what I would be looking at right here. And very specifically, we're looking at the 4 hour chart. We're looking at these levels right here, right? Because if you zoom in here, I hope you guys can see that pretty clearly. I'm not gonna zoom in, but I can extend it a bit. So this is really the close that was right there. And I like to use zones, little boxes, but I also really, for trading, I like to only use price, because that gives you your entry, but also giving you your stop loss. That's why I kind of like the boxes. You can somewhat dollar cost average, but so yeah, just keep in mind, I really like the candle closes, because that really shows the market's point of view. And let's actually use the hour, and this is how you use multiple time frames for your analysis. So this would have been your candles for the 4 hours right here, big wicks, right? And then let's take a look at the time it was right here. So this was the little pattern here that we would be trading. We'd probably be trading managing the trade right here on the 15-minute, and the 1 hour would have been kind of our guideline, another guideline. So you want to think of this as in terms of a highway, right? This is going to be our fast lane. I know it's supposed to be actually on the left for the highway. For me, yeah, maybe I want to change that. But yeah, this is like a highway scenario, where the biggest time frame on this scenario right here is on the left, and the middle highway, right, is the middle lane is in the middle, and then on the right is the fast lane. Okay, the fast lane. The reason why I start off with this one, I think, is because you want to start off with the highest time frame and then go down to the lowest time frame. And you want to capture the domino effects, the time frame ripples, because as soon as this happens on a larger time frame, and you're ready here on a smaller time frame for those wicks, for those rejections, you're ready to be on the right side of the trend here. So right here would have been a nice little entry here for your 15-minute. You can see that this was a range. This is a beautiful pattern right here that generally gives you a really good RR, because it's a range pattern. All right, so let's say take a look once again at the 1 hour chart. This one here is generally a good one that market makers like to use to defend their levels, right? And the 4 hour as well, but the 1 hour seems to be a very good time frame, at least on gold and other assets. Bitcoin's a little bit harder to control, I think. But we can see that this level right here got respected somewhat. It did close above, didn't it? And that's what I look for, because it's really important, at least on this exchange. it closed above. But this would have been the really big resistance level. I know we didn't get there, but that's actually what I look for in my technical analysis when it comes to well, number one is patterns. And once, if you think about markets in terms of those four that I just mentioned, within formations, time, resistance levels, and volume at tops and bottoms, you can also take a look at the Elliott wave principle, because the first ones that I mentioned, that's what W.D. Gann used as his mathematical formula for predicting price action, price movements. And so if you take a look at the Elliott wave principle, you would understand as well that they have basically this exact same formula in different words. So in Elliott waves, what they use is the pattern is number one, the ratio, Fibonacci ratios, is number two, and time, number three. So they use for patterns, the wave patterns, right? Pattern, ratio, and time. And so that kind of blew my mind when I figured out that W.D. Gann and Elliott wave principle is basically the same thing, and you can find some respect in both of them. And yeah, W.D. Gann's got a lot of good trading wisdom, whereas Elliott waves has got the pattern of found in nature. Right, so we kind of want to be on the right side of the trend. At the end of the day, our goal is to make consistent profits, be consistently profitable in the market by following the smart money, by following the trend. And we can do that by aligning ourselves with the trend, direction of the volume, orders, of the order flow. And that's going to be it for this video. I hope you guys like it. And I hope to talk more about order flow and volume, because that is such a key fundamental aspect of the markets, the thinking behind the actual trend. So I'm going to leave it at that, and I hope you guys understand what I mean by order flow, flowing of the orders, buying and the sellings, volume. Peace.